Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, coming to you live from Mainnet 2024 by Masari. Joining me for this segment, we have Jason Rozovsky, who's head of legal at Interop Labs. We're here to discuss how decentralized systems could improve financial oversight and why blockchain isn't a threat to regulation. Jason, it's great to see you as always. Welcome back to Trade Talks.
Thanks.
Let's talk about some academia here, a paper that you co-authored, The New Regulatory Paradigm, how decentralized systems will improve financial oversight. What was the genesis behind it? What motivated you to write this paper?
Yeah, so I think we're at an interesting time right now. So Lewis Cohen, who's a partner at Cahill, was my co-author on this. And we kind of looked around and we saw that, there seems to be a little bit of an adversarial relationship, right? You have regulators and policymakers that are intensely trying to figure out, what's happening with the space. You have builders and entrepreneurs, that are inherently building new technology, right? And you kind of look around and you see there's actual precedent for this, right? Financial markets today have evolved over time, and initially, anything ownership related was on paper, right? I had a piece of paper and I gave that to you, whether it's cash or a stock, and you now owned it, right? Eventually that evolved into centralized paper ledgers, right? All of a sudden, you could just write down ownership structures and it was on paper, and then we evolved to electronic databases. Now we have something new, right? We can distribute this centralized ledger to a global set of computers. And so as you kind of realize that, you say, okay, regulations have evolved alongside that, right? Eventually you had regulations that governed paper. You then had regulations that governed electronic databases, and they were pretty much inapplicable to each other, right? And so in the same ways that a lot of those regulations were inapplicable amongst themselves, we felt that distributed ledger technology, or blockchain, itself had its own kind of new step in a new direction, right? And so our goal here was to really say, let's level set a little bit, and let's realize that not only is there something new about the technology, but there are actually benefits that regulators could glean from this for themselves, which they weren't able to have before.
Right, it sounds like it's a natural fit. Back to your point before, we no longer have stock certs where everything's in street name now, it's all electric. That was a relatively smooth transition. Why is this presenting such a challenge? Is it technology just not understood? Or is that fear of, whether it's KYC or having paper, some sort of trail? Is that what really apprehension is?
So that was part of the paper, was to actually say, there is something innovative here, right? And I think, what's difficult is there's no common taxonomy yet, right? People are all still trying to figure out what are those differences, right? And so, as you kind of look at the idea, again, that you can take this ledger that was historically used by centralized intermediaries, and you can now distribute it, and it's public, that's just something that didn't exist before, right? There is something new and there's something innovative, right? And so, part of the challenge is frankly, the financial markets to date were and still are, in a lot of ways, run by centralized intermediaries at all these different points in the process. And so I think it's a new way to kind of wrap your mind around, what is this new technology, what does it do, and what are its attributes.
So if it ensures more security, it's transparent custody across the board, it's not like it's specific to each firm that has control of these assets, wouldn't that minimize fraud and mismanagement?
So I think that's definitely one of the benefits, right? When you commit a transaction to the blockchain, it becomes immutable, right? So at least from a fraud mitigation and asset custody perspective, which is something that obviously regulated policymakers care a lot about, you're able to now look at the ledger and see, okay, there's no one that can come in from the outside to now disassociate that association, right? So it's definitely one of the benefits, right? And then we kind of list out another 11 benefits, another 11 attributes that regulators are looking for, another 8 benefits of the technology. So as an example, resiliency, right? Regulators and policymakers really care about resiliency of systems, right? Business continuity is a big thing in the space, right? Well, frankly, decentralized networks have a lot of redundancies. Why? Because you have a decentralized set of operators, right? Bitcoin as an example, the last time Bitcoin was down was 2013, right? That's very, very strong uptimes. And I think as these systems play out, you'll see more and more of those uptimes kind of play in.
I also think with interoperability improving across the space, that also lends to standardization,
Yep.
right? And I think that is something that's really key. I'm looking at some of the notes here, Interop Labs and XLR. You've collaborated with Citibank, Deutsche Bank, MasterCard, Northern Trust. These are all big institutions. What came out of what you learned through those collaborations?
So I think firstly, what interoperability does is provides exactly what you said, consistency and standards across networks, right? We're not saying that at the protocol layer, we're saying at the programmatic smart contract layer, right? Regulators can start to come in, become collaborative, right, and think about, what can we enforce at that layer to essentially ensure that they have, what they need, right? And then the industry is able to create transactions that conform to what regulators want, right? Outside of that, enterprises still really care about the same thing regulators care about, right? Transaction privacy, identity, right? What interoperability does, and what we were able to kind of show with a lot of these projects, is you can start to connect private permission networks with public blockchain infrastructure, right? So you can have your, private permission network and your requirements around transaction privacy and identity and things like that, but then you still have access to, the global liquidity that public permissionless networks come with. And I think that, frankly, you're starting to see more and more projects, I think, where, enterprise institutions are starting to think about, how can they start to dip their toes a little bit more into the space, but frankly, they're all waiting for regulatory clarity the way, so many others are.
There are some regions, though, where they are making regulatory headway. I mean, look at, the Monetary Authority of Singapore. Yep. They have been leaders in terms of creating this framework. Is progress being made? Are we still going to be having these conversations 3-5 years down the line? Hopefully not.
I hope not. I would say that we've done 2 projects with Monetary Authority of Singapore. We've done one with JP Morgan and Apollo, where we showed interoperability between an Onyx instance and the Provenance blockchain. We're doing a project right now with Deutsche Bank, and in the next few weeks we're going to be releasing kind of the results of that project. And I think that, like I said, I think that, regulators are starting to kind of open up to this. I do think that, frankly, if you look at FIT 21 bill in the US, if you look at MiCA in Europe, there are exceptions being made for decentralized finance in the US. There are exceptions being made for, fully decentralized services out of MiCA. But that's just because, folks are still trying to grapple, how do you answer these questions, right? And so I think, part of the purpose of this paper is to kind of help drive the conversation forward to say, listen, you know what? Technology's here. It's interesting. There's something new about it. What can you as a regulator or a policymaker glean as a benefit for yourself from this new technology? So,
question for you more from the legal perspective. In the EU, they have the ability to place these frameworks around, whether it's MiCA, DSA, AI, and so forth. What is the challenge with the US? There are laws on the books as it relates to KYC and all the other compliance areas within financial services. Just because the technology is here, can't what is already has already been legislated provide that framework, right? KYC is KYC.
Yep. So I think firstly we have a very complex framework, right? Like the U.S. is a very multi-regulatory regime, right? There isn't just one financial regulatory regime. There's multiple
jurisdictions and states.
That's just at the federal level, right? At the state level, exactly, at 50 regulators for 50 states. So I think we have a complex one. I think that adds to our robustness, right? Because people are so excited about the U.S. markets. Why? Because we have such good, robust systems in place, right? But I think that, going back to kind of the original point, the robust systems were built with the idea of centralized intermediaries at every step in the process, right? And so, I think that's the perspective that you kind of look at it from, and so, as you kind of, go out from that, again, right, I think that there are going to be some core things that people need to kind of rethink, but a lot of these benefits that they can glean from these distributed systems, as we say in the paper, were benefits that maybe they didn't necessarily see at the electronic database when they went from the paper ledger to that, but then all of a sudden they're like, oh, wait a minute, we have more access now to more data that we could have had before. It makes markets more efficient. I think the way the industry is kind of playing out, there's a lot of efficiencies to be gained from this new technology.
All right, Jason, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me from Mainnet. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.